option traders. My name is Gersher. Let's get started here. All right, so let's have a look at S&P 500, see what's going on. So Russia invades Ukraine. We got the market falling, but the market's not falling just because of that. We had inverted yield curves. We had, market making a bearish pattern. So we had supply areas right about here. Market's not able to get above. Before anything happens, I always like to believe the price will lead. Someone always knows something, and the market reacts to that. So this comes down to the everything is priced in model, right? So this is what the continuation with that. So what we want to pay attention to here is this: where does the market go from here? So let's have a look at the indicators here. RSI is at 30. Still MACD's crossing over. If you watched the video from yesterday, I was giving you guys indications that we could potentially go lower here the way the market closed. This was the January lows. The market was testing it. It was able to get below it right after because that's when the news came out. And today we're starting to see some sort of recovery. Now the recovery, is it going to be real? We don't know. Okay, so what I'm waiting for, or what I'm watching for, if the market is going to recover, we're going to see an aggressive push. If they think that this move is overvalued, we're going to see an aggressive push to 443. I'm still not taking a trade here. Waiting for this to break, and then I want to see a retest of the 443 level, then a push down to 443, and then maybe a push up to 458, 460 level, right? Because we also still have inflation to worry about. Inflation is only going to get worse from here. It's not going to get better. Right. Then we also have people sitting at home, so jobless number, consumer spending. In North America, as a continent, we rely on consumer spending. If consumer spending sentiment is gone down, that could bring the markets down as well. So we'll see. It'll be interesting to see how the Feds react. So looking at the bigger time frame, the monthly chart, for example, going all the way back to 2009, it's holding up right here. This green line right here. This is where the support is, and this is where I have a support level drawn as well. I'm looking at the weekly, and this is why the support level is here. So right now for the weekly, we can go for a wick fill about 404. This is a nice area where a lot of the buyers are, and it makes sense. We come back to this area only to find more buyers sitting here because this level was defended by buyers before. So now buyers are here. We'll see what happens from here. But looking at the trends right now, everything looks in term. So short term, they look bearish. All right, so that's a SPY. So let's have a look at the Qs here. Qs, aggressive move down. Went to my level here at 314, just shy. So by 3 points here. Otherwise, we'd be back to all the way to about January 2021 lows here. So we had a nice bounce. That's great. We're back into the supply area, and we want to see if the Qs have it in them to get above 342. If it gets above 342, we want to see 352. We want to see momentum change. But right now, the indicators are all showing RSI trying to reset and bounce. So we want to see if we can get to the 50. MACD is getting tight here. So it'll be interesting to see what happens in the triple Qs in the coming weeks. However, on the intraday time frame, right, so we still got levels for the Qs to step up to, right? So some of the stocks we're going to go over here. Overall, Tesla's down quite a bit, right? So same thing, it went to the lows and this demand zone where a lot of buyers accumulated their positions for Tesla. So it comes here, so it makes sense why Tesla would bounce from here. Just remember, always look at the bigger levels. Right now, if it wants to keep going higher, we can see consolidation before the move to 849, then 920, and then 940. This was a big resistance level. It held up quite well here, and so this is something to keep in mind, right? So whenever you're trading, you're seeing, okay, stock price is getting tight. That means a move is coming, right? So this is the move that Tesla did give. Now it's trying to bounce nicely. We'll see what happens over the coming days here. The other things I want to look at is gold. Okay, so gold had an aggressive move up. Now it's coming down and selling off drastically. So this is an important sign right here that people are getting a little worried here all over the markets. Even some people might be positioning more into equities because they think they're cheaper now. Everybody has a different sentiment in the market, so you got to be careful of that, okay? So at any given time, you got hedge funds, you got mutual funds, you got different traders and different investors in the market. So be wary of the levels. So this is when I was looking at gold. I'm looking at the monthly chart. This is a classic cup and handle, but I'm waiting for the break right here at 194. If the 194 break comes, that's the bigger move here. Of course, you can have smaller moves. This is still a nice one. It's still in consolidation. So either it's going to break down and go below 157, or it's going to break out 184 and get above 194 and keep setting new highs for gold. So right now, gold is still bullish as long as this level holds 157. All right, so looking at VIX volatility, or VX volatility is nice right now. It's above the 32 level, right? So this just gives us some sort of indication that something is coming. It's turning upwards right now, but this is a level where it always turns down from. So we'll see what happens in the coming days, right? If volatility continues to move higher, we can expect much bigger moves on the intraday time frame. So to be a trader nowadays might be a really good thing, because you'll get wild swings where you can trade both sides, short and long, and make quick profits. All right, guys, so this is my analysis on the markets. I'm still bearish. Everything's still coming down. There's a lot of levels for the market to get above before we go long here.